So we are in for quite an interesting topic and a very high-powered panel. The topic of discussion is risk management strategies in the backdrop of the new digital era. We all know and it can't escape us, and there have been a lot of discussions since morning on the topic. The theme on the opportunities which are now presented because of the digital evolution in the ecosystem around lending, specifically in NBFCs, is pretty well discussed. Today, we are a group of CROs who will also now throw some light on what are the additional risks or new items which we need to focus on, especially concerning risk management strategies. On that topic, I would like to invite first Deep on your thoughts on the new regulatory guidelines in light of the new upcoming digital ecosystem. As an institution, what should one be careful of? What are the risks you think have now become more important? And as a CRO, what should one be careful of?
Thanks, Anuj, and good afternoon to everyone out here. Okay, from a regulatory standpoint, that in the digital context. So let me first start off by stating the obvious. Especially in the BFSI, the highly regulated sector, and we exist solely because the regulator gives us the license to operate. And hence, it's extremely important, irrespective whether this is the physical or the physical or the digital business, that we are fully compliant with whatever the law of the land is. Having said that, digital just does pose quite a few interesting challenges. At the same time, it also gives you a fair bit of opportunities in terms of what you can do. Now, to ensure that you are proactive in terms of regulatory compliance, it calls for a fair level of meticulous planning, coordination, and most importantly, execution. A couple of things which I think most organizations, every organization which is in this highly regulated space, will have to ensure. One, you need to have a dedicated compliance setup. Now, under the new scale-based regulation, the regulator has insisted that certain NBFCs, which are above a certain size and scale, they will have a CCO or a Chief Compliance Officer. So it's a must that with the growth in your AUM, in your book, and the complexities which come in because of the digital lending that most of us now are doing, you need to have a dedicated structure which needs to be adequately capacitized. So you need to have a CCO and you need to have the team around CCO to support in terms of implementing all the regulations. The other thing is that you need to now start conducting a detailed impact analysis of any regulation which has been rolled out or which is in the discussion stage. So the regulator also doesn't just roll out a regulation or a new guideline. They will initially roll out a draft paper. They will call for industry discussion, and only post that will it become a regulation or a circular comes up. So it's extremely important that you start conducting proactively a detailed impact analysis or a gap analysis to figure out how the regulation will impact you. And if you have to mitigate that impact, then what is it that you need to have in place? It could be a system fix, it could be a platform, it could be a process change, it could be changing the way we onboard our customers or even source our customers or do the due diligence. But those are things which need to get done when you're doing your impact analysis. The third thing which actually then comes to the forefront is that you need to have regular engagements at the industry level. So have a voice in the industry body when it engages with the regulator. That's something which is extremely important. I see a lot of that happening, at least within Aditya Birla Finance. We do that quite actively in terms of being in the industry forum in that body and sharing our concerns, our thoughts with the regulator. So that regular engagement with the regulator through the industry body, I think, is a must. The other thing that we have to do, which perhaps a lot of us have now started doing, but for the ones who are not doing it, start adopting the latest technology. Look at how technology, and especially your partnership with the fintechs, can help you bridge some of the gaps that you have in terms of what the regulator expects of you and what perhaps we are doing right now. Now, the moment you start doing these things, I think a lot of what the regulator expects from us and what we are perhaps doing gets mitigated to a large extent.
Thank you, very comprehensive perspective. Indeed, our regulator is one of the more progressive regulators as far as new initiatives are concerned. Thanks. Coming to you, Kunal, with advent of more and more straight-through processing and overall digital lending, uh, technology glitches and cyber attacks are now becoming more and more common. So, in your view, what can be, as a prudent organization, what can one do to safeguard us?
Thank you. Thank you. Before I say, let me share the obvious. Thank you, Elets team, for having me over here. The views that I'll be sharing over here are my personal views and not the views of my organization. So, taking a clue from what Deep said, that there is already a lot of focus on digital technology and the adoption of new technology. While we do that, there is obviously a risk which is associated with that, which is the information and cybersecurity risk. To mitigate that particular risk, we presently align ourselves in two directions. The first one is on the risk management side, where we will do periodic VAPT assessments and try and test how our system is how what is the level of protection of our system, how well protected it is, at what level of penetration can happen. And we also certain times do an interesting experiment by hiring some new age young guys who are into ethical hacking. We invite them and try and give them a challenge to try and do this kind of exercise on our system, so that we get to know a different perspective. How well our system is, how well we are protecting our data. Because data is the most crucial thing, that we are a custodian of our customers' data. The second aspect is from preparing ourselves, where we do three kinds of things, which is first one being the business impact analysis. So we have to prepare ourselves from a business continuity, just in case there is a cyber attack. Now, how will we deal with it? So to assess what is the level of risk we are gauging with, we have to do a business impact analysis, where we kind of see what is the confidentiality, availability, and integrity of our data, and what is the RPO and RTO levels, at what point of recovery you want, and what is the time of recovery that you will take. Let me give you a small example. Like during the month end, collection process is more important than clearing the vendor bills, right? But the time of the committed bill cycle for a vendor payment, those particular days, that particular system will be important for me. So if a business attack, or there is an attack on the system, or there is non-availability of the system during the month end time, I will give a preference to ensuring that my collection system is active, rather than focusing on some of the other systems which are not crucial at that point. Last but not the least, the other aspect that we also do is training the employees and educating the employees. Whether it is through the phishing exercise, whether it is through the L&D team doing regular trainings on employees, guiding them, coaching them. Because a recent study which I was looking at showed that 72% of the cyber attacks in the Indian financial service sector happened because of an employee either knowing or unknowing, and mostly unknowing, taking certain steps or clicking on certain hyperlinks which are basically not utilized. So training of people therefore becomes another important step over.
Thank you. Kaushik, coming to you, and in continuation to what Kunal was saying, uh, data privacy and security now has become uh, right from customer data to other vendors' data is getting exposed at various levels. So, in this new realm, what do you think should be an organization's priority in safeguarding this?
So hi, good afternoon everyone. Thanks Anuj. So in continuation to what Kunal told, obviously, so I think now that data prevention, data security, cyber security, I think has really become very critical for each and every organization. The way we are moving towards the digital era. So some of the points which we do in our organization, so it's starting from the preventive controls. So we have a cloud-based system from AWS where it is assisted with your wireless access firewall, which helps us in preventing any outside traffic which is not required into our systems. Apart from this, we have framed multiple policies in relation to the access-based controls. Which access need to be given to which employees? Any employee working outside the work domain, there is a VPN-based access. Then there are single sign-off policies. Single sign-on policies basis the two-factor authentication. Any system, whether it is your LOS system, LMS system, or a CRM system, customer service system, HRMS system, you need to have a single sign-on with a two-factor authentication, which again helps us in building a preventive check so that no one can come into the system and take the data. Fourth point, important point, any admin users taking control of the core data systems or reports, there is a privileged identity management system which helps in detecting and recording what data they have accessed at each point of time, and that helps in building a very preventive control for the organization in terms of data. Apart from that, we do VAPT, what Kunal mentioned, the vulnerability assessment and performance testing on regular basis. And some of the things which we do on regular basis as a monitoring exercise, in addition to these preventive checks, are the CISO function. On the regular basis, do a proper access-based control audit, VPN audit, and this VAPT audit. So all these things are properly checked as a preventive check also, so that if there is any flaw, if he feels that there is any issue, that is detected and the corrective action is taken then and there. So it's a mix of preventive control with a regular strong monitoring with the CISO function, which is done to ensure that the data security and this cyber attacks, what we are talking, and the data control remains within the organization. One more thing I think I missed is the DLP, the data leakage prevention. That also is exercised by us, where a daily report is generated in terms of high risk, medium categorization of the data which is going outside the organization, and also if any printouts have been taken by any user, a report goes to the CTO with what type of data, what printouts are taken. So I think that are my views, what we are doing in our organization in terms of data security.
Thank you, Kaushik. Deep, you wanted to add something?
Yeah, thanks. So just building upon what both Kunal and Kaushik stated, I think one of the critical things which needs to be done, and this needs to be done by the CISO along with the ops risk in any organization, is to classify all data. So you have to risk classify data into what is sensitive, what is extremely sensitive, what is high highly sensitive and what is perhaps not that critical data. So once you have done that classification, then all your measures, both in terms of prevention, detection, monitoring, should be basis the risk classification that you have in place. And also, it's extremely important for most organizations, and we have seen a few ransomware attacks, without taking name of certain organizations which actually fell prey to that. It's extremely important in today's day and age for every company to start subscribing to darknet monitoring services. That is something which is there. It's extremely important for the CISO function and for the infrastructure team to continuously monitor the darknet to see if any of your data pops up out there. If there's even a remote possibility, then I think we need to backtrace that to see as to where that possible leakage would have happened. Also, third-party vendors and the assessment of those vendors and their touch points with us again has become extremely critical now, especially with all the APIs that we are either exposing or consuming. It's extremely important that you have a complete line of sight on your third-party vendors and what they are doing with you.
No, very well said. I mean, this is one of the common fallacies is that a lot of time we implement a very rigorous process for on our own data, but the most vulnerable points are actually outside. So very well put, I think. Shakil, I want to bring you in the discussion now. In the new digital era, new kinds of operational risks are coming. So how do we identify them? How do we assess them? How do we mitigate them? What is the new thought process?
Thank you, Anuj. And I will talk, a lot of things, which my fellow speakers have already talked about, and I think I'll combine it all of that in one. And how Vastu we approach this entire piece. First and foremost, the operational pieces, they affect each and every function of a company. So the operations is done, small bits and pieces by each function. The most important part in this entire piece for Vastu has been that we have tried to automate things as much as possible. So the manual handoffs, if you are able to remove from each process and you are able to automate that, I think that takes care of a lot of parts. Because as much of manual work, it leads to more points of leakage, more points of misses, whether it is intentional or unintentional. So it leads to a lot of operational risks. And by doing so, I think the important part is that whether you are doing it in-house, because there are a lot of companies who are developing system in-house, they are changing their processes in-house. The important point is that you build it as part of the your ecosystem, that the entire the process management and the process mapping is done by the teams and this gets automated. The second part is that wherever you do not have the internal capability, I think the overall financial ecosystem is evolving in a way where you have the external capabilities, the systems available, which can help you automate some of your processes. Right? That again helps you in eliminating the part of the operational risk wherever it is there. The third and foremost, and I think Kunal mentioned it briefly, is that train your employees. I think that is one of the things where a lot of the organizations don't focus, and we at Vastu, I think we spend an exceptional amount of time in training people in identifying some of these aspects of the operational risk. That the people, when they're trained, they understand what are the risks in each of the processes they're handling. It helps you eliminate those risks faster. And I think the last I would say is that as you build any of these systems, you build those trigger points. What are the key factors that you look at? What are the key matrices of the operational risk? And as much of it that can come through systems, better it is, the less manual intervention, and you go on and improve it as the over a period of time.
Yeah, completely agree. If you want to say something.
I'll just take Anuj, I'll take the liberty of just adding a few more points. I think Shakil touched on most of the critical points which are there around operational risk. But I think what we have realized, Aditya Finance now is a large diversified NBFC. So we realized that there's a fair amount of merit now in having a detailed and a comprehensive operational risk framework, which is then approved by the board. which empowers the ORMC, which is the Operational Risk Management Committee, to ensure its implementation. And the reason it becomes important is because if you can detail out every process which exists within your organization, and you can then, for each of those processes, you can identify the process owner, and then you will have a set of functions which are the risk owners. So the process owners are supposed to identify what are the processes, what are the gross risk which exists in that process, and what is the gross of the inherent risk, and then what is the residual risk because of the mitigants that they are putting in place. The moment, and it's a comprehensive exercise, it's not an easy task. It takes a fair bit of bandwidth within the organization to have that structure in place to run this comprehensively, to identify the RCSAs, to have the KRIs put in place, and then to monitor this on a monthly basis. And Shakil did touch upon the fact that this also calls for a big cultural change within the organization, where right from the top management you have to walk the talk, and you have to exhibit that behavior where the operational risk, not just the monitoring, but also the identification, the reporting, not just of the operational losses, but even the near misses becomes extremely critical. Because those near misses, which might not result into a financial or a non-financial loss, but they can give you critical learnings in terms of what perhaps is a risk-prone area that you need to mitigate, that you need to completely cut down. So it's extremely important, and it's I think quite key for in today's day and age that every organization should now put in place an operational risk framework, have a ORMC which meets on a monthly basis, have an ORM structure which supports that ORMC in terms of implementing, monitoring, and executing that policy.
I cannot say anything which both the gentlemen have said. On top of it, there are two things, which will be the key differentiator, in this particular thing. One, which Deep and Shakil just mentioned, how well is the culture adopting it? Reporting a near miss or reporting a loss also of a lower value, how well are people made comfortable to report that is a very big task. It's like, because the other person feels that if I report this, I'm kind of giving a complaint against that man. That is not a complaint. That is actually somebody telling that, oh boss, there is a loophole which is open and we need to fix it. So that is a big cultural change that we're talking about, and like what Dean mentioned, if they're setting up the ORMs, that is like setting the tone from the top, because the board itself is accepting the ORM framework. The second important piece, which is kind of missing, not in NBFCs but India as a whole, is and this is something that I learned by working with one of the British companies, is that they over there have something called as loss data sharing. So a loss data sharing is where one financier, if he has a loss event which he has reported, that loss event is then shared across by a body with all the other financiers for them to actually test that scenario, whether that same scenario can occur in their own company or not. That also kind of gives you a view on some of those open areas, which even if you're not getting from the best possible cultural driven organization, but at least you have some scenario which is a practical scenario or a practical issue which has occurred in the same market or same kind of industry in the market.
Thank you. Very well articulated. Sometimes, if you recall, the basics of operational risk was having a good maker and checker. Lot of times, because in the new digital era, processes are automated, people think that maker checker is not required. Now that thought process, and that is the cultural thing which I think Deep was also mentioning, is very important, that in this new kind of environment, how do you inculcate the same rigor and the same thing, if not happening, how we make an environment where it can get highlighted. Completely very valid points. We have talked a little about what are the new kinds of risks emanating because of the digital era. But we should also talk a little about how the new technologies can help actually mitigating risks, and how can we leverage it. And this is open to everyone. In your experience, what do you think? There is a real fear, especially for in the old guard, whether they understand the new technology enough to leverage it enough. So, what can we do as risk professionals to harness that? Kaushik, you want to start?
So, yes, so I think the way overall new emerging technologies are coming, and obviously they are aiding in risk management. Some of the emerging technologies, or some of the, I think what we use is, we have our own in-house LOS, which is low code, no code, which we have totally developed from the scratch for our one of the product unsecured business loans, which helps us in deploying one of the best technologies, Angular technologies, and also building multiple firewalls without much loss of time. Apart from that, into the credit risk management, building up different scorecards with the help of AI ML technique, and that has really helped us in segmenting the customer at the time of onboarding, as well as in terms of EWS, in terms of monitoring as well, in a much better manner, and that has led to a very apt credit risk management for the organization. In terms of some of the regulatory risks, the way technologies are emerging, like the consent-based architecture of India stack, whether it is eKYC or eNash, eSign, some of these technologies have also really helped in ensuring that there is no identity theft, and it's the same customer who has applied for the loan, and he's only coming on the structure and signing it. So apart from this, multiple other technologies, like how we can triangulate the KYC with the help of what address customer is declaring, what address is there in terms of eKYC, and where is he applying the loan, the city pin code, the geotagging, the geo coordinates. That really helps in building a very strong check in terms of the identity part. So these are some of the tools what we use in our organization in terms of strengthening. Apart from this, there are multiple APIs also, which has really evolved and helped in strengthening the overall risk management framework, like getting data direct from the source rather than getting bulkier files or papers which are more fraud prone. Why don't have a OTP based consent and getting whether a bank statement or a GST or a ITR related data direct from the source and consume that, which is less fraud prone, and also multiple AI ML based technologies which we can use from outside, which really helps in detecting even the documents are fraud or not. So I think these are some of the things which has really helped us in building the risk management on the credit risk side, on the regulatory risk, on the operational risk side for our organization. Yeah.
I think apart from this, there are other things which have started to happen. See, one of the most difficult area I think for all of us as lenders has been, when you're dealing with the government, anything which is to do with the government. So, but I think of late, that is one area which has become very visible. Some of the things that you talked about, the Aadhaar authentication. I think the land record digitization is one of the things which is coming in big. So there's some states which are ahead, some which are behind, but I think there are a lot of states which have started digitizing the land record. So you're able to, sitting at your office, you can actually check somebody's ownership of a property. Similarly, RTOs. A lot of RTOs are getting integrated, and now you can pull Vahan data. Now, some states have started that the RTO is saying that you please integrate with me for putting a hypothecation in the vehicle and removal of hypothecation. That has started. So I think on government side there is a lot of data which has started to get digitized, and I think that is going to come to a big use. And whether you're integrating with it directly or through a third party, I think it's going to make a lot of change in the way we do, whether it be risk underwriting or the operations.
Thanks, Shakil. I won't talk about all the emerging technologies and what we can do with it and what we are doing with it for the simple reason because there's enough and more. So you have the public digital infrastructure, which I think our government has done a fabulous job, and I think the private sector also has taken to it like fish to water. So that's something which is happening beautifully, and today we have enough and more. We have the ONDCs, we have the OKENs, we have account aggregators, we have access to people's KYC digitally. We can get it right from the government source, so it helps you do your KYC due diligence, it can help you do your financial due diligence. All of those are wonderful things which are happening right now in India, and I think we are at a cusp of a massive change which will happen, and it will be led by digital. But let's also dial back a bit. Most of us who are sitting on the podium right now and in the panel, we are not digital natives. We are on the wrong side of 40 or 45, if I can take the liberty of saying that on behalf of my fellow panelists. Now, some of these new terms like AI, ML, generative AI, these things don't come naturally to us because we weren't born with it. I remember when I was completing my post-graduation is when a computer had just come into its own, and for me to get a new computer was to get the same assembled because it was the cheapest way to have a computer and it was a bulky desktop. So I'm from that generation. And we realized that it's not just me, but it's also reflective of the organizational structure, and the hierarchy is such that people who are the decision makers are not the most comfortable set of people as far as digital technology goes. So what we did was, it's also important, and this is something which I think most organizations should do. We took right across Aditya Birla Capital 150 of our top leaders, and we taught them everything that is to be learned that you can do within a span of 2 or 3 days on what AI is, what ML is, what big data is, the difference between something as simple as what is a data scientist, who is a data engineer, who is a decision sciences guy, how do you consume big data, how do you make the most of analytics, what is analytics, so that at least you get comfortable. At times it's also because we are at a certain stage in life where we don't want to, or we are not comfortable showing our ignorance, and we feel shy asking about, listen, I don't understand that acronym here, can you please expand that to me? So we sit quietly, and that's the most dangerous thing for an organization. I think it's extremely important for the people at the top to get comfortable with what's happening today in the digital space. I think that should be the first step that any organization should take before you start embracing these new technologies.
Absolutely. I mean, people on the wrong side of 40s, they think analog, and they have been now forced to work in a digital environment. Steve Jobs very famously said that I hire smart younger people so that I can learn from them. Not that the same thing applies to a lot of us. The future is to hire very bright people who can think digitally and learn from them, and then apply our age-old wisdom. We have almost reached the end, but before we end, I wanted one comment from each one of you on the future of risk management in the digital era. How do you see it? What are the challenges, opportunities? A very quick 1-2 minute summary from each of you.
The mic, I'll take the liberty of starting. Now the future of risk management in digital era, I would put it in 3 dimensions. Dimension number 1, it has to be based on your customer needs, what the customer wants. We should not go overboard. For example, if there is a product which requires to be delivered within 3 hours, which means you need to do early decisioning, and therefore you need to basically put your resources according to that. If there's a product which takes time to build and then deliver, and decision is not that fast, there's no point in basically emphasizing a faster decision making things over there, because to decision fast you will have to go digital. Once you go digital, you are exposing your ports, your opening ports, and there is a risk of cyber attacks because those ports are open. Point number 2, the other part of risk side of risk management in the digital era will be that today I can talk to the gentleman over here and risk management at large. Conceptually, risk management today has changed from being a more subjective topic to becoming a more and more analytical topic. The entire risk-based decisioning structure in any organization or most of the evolved organizations are now backed with a lot of data. We also, when we are proving to our own customers, whether it is, the sales team, collections team, or, whosoever it is, and if we are backing the data, there is a lot of acceptability. There are correlations which can surprise you. So therefore, risk analytics and the future is risk, data-backed analysis. The third is that, there's this very popular movie, of Spider-Man, which the part one, where Uncle Ben told Spider-Man, with great powers come great responsibility. So you don't have any data of your own. Let's be fair. We as NBFCs, we do not have any data of our own. We have the customer data. We are basically utilizing, some of our own engineering, which is backed by some API data from the outside, and then we are applying certain, analytical permutation combinations on that. And then we are saying yes or no to the customer. After that, we are doing some behavioral analytics, and then we are collecting from the customer according to that. At the end of the day, we are basically custodians of the customer data. So use it like, in our own houses, we protect gold. So for us, the data is the gold. And, therefore, the protection of that data is very, very important.
Thank you. Shakil, you want to say something?
See, I have two very simple things. See, I think first is that you have to be open to new things which are coming up. See, in a digital era, there is something or the other which is changing every day. So I think most important part is keep your mind open as risk managers and continuously look at what is the new thing which is coming. And second is test and learn, right? Because the other part of risk management is don't go whole hog even if something is coming new. Whenever you find something you think is useful that you can deploy in your organization, do a test and learn. Understand how it can add value. I think that is a simple way of managing risk in this digital.
Deep, some final words.
Okay, I'll just say it in one sentence. I think in today's day and age, risk management is real time. So unlearn and then learn. And as against gut feel or instinct, go with what the data throws up. It's as simple as that.
Kaushik?
I think most of points have been covered. Same, I think you have to be really proactive. It is now risk management is not the way it used to be earlier, like a credit risk management or a operational risk management. Multiple facets of risk are now emerging, and we see that whether it is ESG risk, which is coming up in a big way, then there is a climate risk, reputational risk, regulator risk. So I think it is now not a 1, 2, 3 subject topic. Risk management has been now a very, very wide era. And I think everyone has to be very proactive in learning it and then deploying that in the organization. So that culture has to be there, that understanding has to be there in the organization right from the top to the bottom. That's all.
Thank you. Thank you. Our time is up. This has been very, very interesting discussion and we can carry on, but people are getting jittery. But thank you. Thanks everyone.